Saturday was an absolutely bloody gruesome day for the altcoin market. Many altcoins crashing to new lows. This is putting a lot of crypto traders in uncomfortable positions, but Bitcoin continues to remain at stable pricing, holding above key support levels. Am I a maxi? Whatever, maybe I am. But the main thing here is that we want to protect our portfolios and reinvest at certain times in the market. In today's video, I want to look at key reaccumulation zones for BTC, as it looks like we're coming towards the end of yet another fear cycle in the market. And of course, we still have some of the major markets to get through as well, as these continue to rise and rise and rise on the back of much bad economic data and fear out in the market, like the S&P and the NASDAQ, coming very close to new key resistance levels for the week. So make sure you hit up that like and subscribe button. Let me know in the comment section where you are sharing the content. There is plenty of fear out there, but the markets, like they have done for many months now, have been heading higher and higher and higher. If you want to stay up to date with the markets, Bitcoin, stock markets, and real estate, top of the video description is our free crypto and economic report. It comes out once every 2 weeks. And if you want to get involved with our free trading workshops, trading cryptocurrencies like many of our members are here, crushing it, 200%, 193%, 220%. Then again, link in the top of the video description for our free crypto trading workshops. All right, enough of me shilling there. Let's get on with the market update. Now I've got my daily bullish market update. Yes, I'm bullish, bias bullish, but the markets are bullish. The markets have been going up. I can't deny those facts that are coming through from the market. The S&P 500 is up 25.5%. It was only a few days ago where the old bull market was confirmed, as it was up 20% from a closing price back in October to the closing price after it hit 20% from that low. That is technically a new bull market. The same thing happens on the way down, which confirms a bear market. When that market goes down 20% from the high to a closing price, it's a bear market. Now we've flipped that. So this is, technically speaking, now a bull market. And many of the masses are catching on to this as we start to approach new resistance levels. And that's why I have here on the chart and what I'm dedicating this first part of the video to, because this gets us towards what's happening with Bitcoin in our reaccumulation zones and what to look out for, especially when it comes to the media, especially when it comes to the emotions in the market. The bears will attack when we hit those key resistance levels. We have blown through this level here. I had this on the chart. This was one of the rejection levels, just like it was back here at the 50% level. And this was the August top. So this was a key monthly swing top. That was it there. So once this market breaks through that level and holds above it, so we've got several more days to get there until we get to the month close. We're only about halfway through now. That just adds more and more strength to the overall bull market. We've covered many of the macro reasons why that has happened that we've used before to identify macro cycles. But of course, there's going to be some corrections, and that's what we want to prepare for. Like we can see it on the S&P, the same feelings and emotions and narratives come up for Bitcoin as well, so that we can prepare for that and get into those reaccumulation positions. I'm talking Bitcoin here, not the altcoins, not the cryptos, because they are in a very different position to what Bitcoin is in. Just looking at the facts on the charts, not bringing my own bullish bias into it just yet. That'll come. Just the facts on the charts for now. So the bears will attack at these upper levels. We're getting closer to them now, probably around that 4,500 point level, and we can bring it all the way up to about 4,600, whereas where these tops are. So somewhere, I'd say in this zone would be likely for a rejection. We could get it sooner, but just technically at looking at this chart here with the previous resistance levels, that could be a good area for the market to come back, correct, bears start to attack. I can move this further down. It doesn't really matter. It's within this zone here that you'll see those narratives pick up. One particular narrative, at least for us chartists here, is looking at the volatility index, because the greed has risen so high on the S&P, on the stock market. And so we're starting to see the volatility rise from these previous fresh lows. This is what we want to see going down. We want to see the volatility drop for a bull market. And then within bull markets, it's natural if we get corrections, even small corrections like we had through April, May, and June, on the back of things like the narrative of the debt ceiling, and regional banks collapsing, and throw in anything else there. There's always some sort of narrative that the media is pushing. It's going to happen, and we get these small corrections. And now look what the market's done, just absolutely explode in the opposite direction. So we've seen the highest daily close in 2023 for the S&P. The S&P broke the monthly swing top, another bullish sign here. NASDAQ, highest daily close in 2023 and in over 434 days. We've got to go all the way back to April of 2022 before we saw a higher daily close. It's also hit 15,000 points for the first time in 14 months. So again, going back to April of 2022, it hasn't been this high since all the way back here at that double top. There's your double top and then a collapse. So it's getting back towards this double top. So note what I just said there about the bears attacking at these key resistance levels. I'll probably be inclined to raise this bar now up to the next rejection trap or resistance level, whatever you want to call it. Because like we said, we're seeing that VIX also start to rise, which typically forms lows in the market as well. So we're starting to get towards some of those now. Of course, we have the key data coming out from the US as well. There's some CPI, there's some PPI, there's a meeting next week with the interest rates coming up as well. There's always something happening like that. And like we've seen, like we've proven now, this just continues to go up and up with higher and higher lows. So if we get those pullbacks, look out for any of these key lows. If it doesn't make it back to these key lows, then it's just another higher low forming in the market, and it's only a matter of time until we come back and test or break the resistance levels yet again. So that is what we're seeing in the daily bullish update. That is the market telling us what's going on. This is not the bias yet. I'll give you my thoughts there. Bitcoin is holding above the 50% level. So this takes us across to an update for BTC. We're currently trading around 25.9, basically $26,000. The short term, before I get to the reaccumulation areas, is we're looking at zones that the market is trading between as it continues to filter out the supply and the demand. Where is the demand coming in? Where are people buying and where are people selling? That's all that ever happens in the market. It's always just buy and sell. It's really that basic and that simple, but that's boring. That's way too boring to talk about. The main thing to talk about is the news. What's going on in the news? Oh, what do we have? The last thing we had was the SEC suing Binance and Coinbase. That was this bar right here. Then we had the altcoin reckoning, which was that bar right there. It was basically nothing, and the price is still trading within this range. Will it continue to? I don't have that crystal ball. What I do have is my support and resistance zones, and I have my plan. On top of that, I manage my emotions in the market, and that is primarily what I'm talking about here before we get to those reaccumulation areas. Because when we're in these small, tight trading ranges, any sort of move to the downside is extreme emotion. 5th of June, if you remember back to that, that was the suing of Binance and Coinbase. There's always some news and narrative event that's put to one of these days. That was all of 5%. Okay, if you want to take it to the extremes of the day, it was 6.4%. We take it back to the Saturday 10th, 4.3% the whole day. That was when the altcoins got wrecked. And then it was 2.5% where it ended up closing. Now the market's still hovering within that candle itself, within the body of that candle. Now, it can continue to go down from that point. In terms of percentages, we're looking at to the 50% again, somewhere around 2.7%, maybe to the bottom of this zone, which I'll talk about in a second, 8 or so percent, looking at around 23.9, around that 24K level, which we've covered for many reasons. But the point of this is those moves to the downside, although how minor they are when we look back on them, they feel extreme in the current environment because we haven't had much to keep our adrenaline pumping. Over the last several weeks, there's not really been that much to talk about, and the emotions basically just all get churned up and they wait and suppressed. They get suppressed, and then we get some news announcement, some news event that pumps the market down or dumps the market, and then the market pumps straight back up. So this is a typical or characteristic sign of a market climbing the wall of worry. Here's some worry, market climbs again eventually. Takes some time, but nonetheless, it'll eventually climb out of it. That is basically what happens with those emotions. Everyone is just holding on, hoping and waiting for something. News event, nothing much has happened. So any sort of move is quite extreme. Think about it as if you were starving. You're starving of adrenaline in this case. So something happens, awesome. Now we've got something to be worried about, something to be fearful of, something we can go back to with a narrative and try to explain whatever the hell is going on in this market. You're wrong, I'm right, etc., etc. And then all the fights start from that point. That's what happened again on Saturday. Yet, look what the market's done, nothing. So, moving forward from this, it's very possible that we do get another move to the downside just to clear out any more of those emotions. And what we want to do here is just look to where those moves to the downside, the actual price, could head to while remaining bullish. Now we have the one key area here. That's that low in March, 19,500 or so. Looking at that price, 19,568. So the market could really move down to any of these prices in here, have a quick move back out. We don't want to see it consolidate under these levels and still be in a macro bullish structure. So that just means time to buy, time to reaccumulate. And I want to go through that in a chart in just a sec, looking at key price levels as well. But we've got to understand what can happen when it comes to the narratives, what happens with the market sentiment, because of course we saw that just on Saturday, literally like 3 days ago, how extreme the feelings get, and we just pause. We freeze like a deer in the headlights, just like what happened in March when the banks all collapsed, or basically a couple of banks collapsed, banks that weren't even in the top 5 or top 7 or 8 in the US, but the headlines get you. I still see that come up. It was the biggest banking collapse in history, or the second largest. Sure, it was the second largest, but the data just screwed with those people again. Because even though it was the second largest in history, the bank itself was nowhere near one of the biggest banks in the world. So it was 200 billion, 230 billion that collapsed. The biggest banks in the world are in the trillions. And when you accumulate all those banks together, this one bank didn't even mean jack shit to the entire market. Now, some people might think I'm speaking out of turn here, but the market speaks for itself. It's unbelievable how much people get caught up in the news headlines and the narratives. So I emphasize so much on the market sentiment or your own trader psychology, because once you can get through that, once you can break through that part, you've basically won. You will win the game. Now you just need to have some rules in place to make you act when these things happen. So overall, we're in a macro uptrend. We're in a macro uptrend. The major areas have not broken down. The major lows, the monthly lows, nothing is broken down. So if we break down from this zone, the market is now looking to test where does that demand come in. And we have key levels, looking back at history, where this demand could come in. So we're setting up our plan here. We're setting up what could go on. So if we get the move down to the downside, providing we don't break 19.5K, then these are all basically reaccumulation zones, and we just wait for the market to head back to the upside. Of course, we don't want to see the market start to consolidate under these levels, meaning multiple bars, multiple closes, and the market just basically continues to grind on down. That's not what we want to see. But again, at the end of the day, when it comes to trading and investing, there are no guarantees. There's just how we act when the market gives us those signals and how we protect our profits at the end of the day. So that's the short-term look moving forward in case this thing does break down. We've got our key levels there. Now to the slightly more macro look at the market, looking at BTC over the longer haul and these areas that we had covered before in terms of historical Bitcoin cycle buy zones. So I'd looked at this going back to the previous 2 cycles, 2014 into the 2015 bear market and the 2018 into 2019 bear markets as well. The same narratives continued to pop up. Previous 2 cycles ago, Bitcoin will go to $100. It didn't, and it basically hovered around 200. Sure, there were a few spikes down to 160. You can bet your bottom dollar barely anyone was buying there, but the few who were buying up a lot because we see it on the volume. There was a lot of volume. There was a lot of supply coming into the market, and the demand just held it up. Same thing happened at the lows in 2018, 2019, and then again at the spike low, the pandemic low in 2020. I remember that time there. I bought a little bit in one of my portfolios, not enough, as hindsight would have it, but I did buy some in these zones at these levels, underneath this mark here, around $5,000. Anyway, not to brag on that, but I remember from that point, It was very emotionally difficult to be buying at that time. But the main thing that held up was the lows. The market continued to get higher and higher from that point. So although in hindsight it looks like, just wait, the market's going to break 20 and then I'll buy it when it hits 20. When that happens, or if it happens, it's so hard to be buying at those times. So it's great to have a plan in play, because always there's always going to be someone saying, well, it's going to go lower and lower and lower. So last cycle was, we're going to go to $1,000, never got there. Only 3,100 was the low, and then basically held up at 3,500, hit its head at 4,200 a few times, and then broke out of that zone. Same thing in the current cycle. When we hit 17 and a half, all of the calls for 14, and then 12, and then 10, and 8, and $3,000 continue to come up. And guess what? The lowest it got was 15 and a half for a matter of days, and then pushed back to 16 and a half, 17, and then basically we didn't see the teens ever again. So those historical buy zones are essentially the cycle low to the cycle top, and then I've used the fib to divide it up. Basically, you could have a correction of 75 to 87.5%. That's what these two levels are here, because I'm taking the 25% and the 12.5% of the zone when we look at it to the downside, which would basically be a correction of 75 to 87.5. And that would give us that buy zone within that cycle. We had that quick spike to that zone again for a matter of days before the market was out. Same thing on the previous cycle, the same correction, got the buy zone. It happened to stay there for several more months than what happened last cycle. And this cycle, we barely touched it, which shows that Bitcoin is becoming less volatile than what it has in the past. Sure, there's only 3 cycles. Maybe we do more in the next cycle. Nonetheless, this is what we have right now, and all we're using this data for is to give us those buy zones and then reaccumulation zones. So with that in mind, looking back at the cycle of 2015, 2016, you can see that we popped out of these white lines. That's the first accumulation zone, and then into the zone of white and yellow, which is the 38% here. So there was good opportunity, plenty of opportunity there. But again, looking at the market sentiment, what was happening at the time, at this stage, it's pretty much what's happening at the moment. People are saying, well, this is going to go back down. You just wait. It's going to go under $300 again. Going to go under 250. It'll go under 200 again. I wouldn't be buying. You just wait. You guys are all going to get screwed. Blah, 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 blah. Same thing happened again. And yes, the same bearish fear will come up with a different narrative. This time around, it's Bitcoin's never seen a recession. Well, we're not even in a recession for starters. And yes, the recession keeps getting pushed out further and further and further. But again, it's just the narratives. Even if it isn't a recession, the rest of the market, like I covered at the beginning of the video, is going up and up and up, and potentially will come back for a correction. So that's the zone. It's holding up at those levels there and then continue to break out to the upside. Again, it basically blew through this area, and there wasn't really a nice reaccumulation at a reasonable price until it came all the way back 6 months later and sat in that zone for a few weeks, pushed out, COVID, sat in it again, and then pushed out again. So it wasn't really too much opportunity. This time around, we've been sitting in that zone for much longer. So this could potentially be another reasonable reaccumulation zone before we start to move our way past 28K, 29K, and then of course the 31K tops. What else have we seen? Well, we're seeing the support come in at previous market support levels around that 25K, 25.3, which was the double top as well. So we're just looking for any sort of quick moves below that level, which would probably be reasonable buying opportunities. Like we've covered before, this will feel like the worst thing to do, and you feel like an idiot because all the bears will be telling you it's going to go to 20 or 18. But when we look back in hindsight, probably won't even be spoken about anymore. Even these sort of moves here from, say, 8.5 down to 6.5, that's a huge move. But look at it a couple of months later, no one's even talking about this move. So even these few percents to the downside, no one's going to be talking about this in several months' time. So it's basically trying to get that head out of all of the noise and into a strict plan, looking at key levels of support and resistance. So that support level was around $25,000. You can see the low here was $25,004, and those previous tops were $25,003, that double top in August and February. We take it back to the previous cycle, you can see that a key support level of the bear market ended up becoming a key support level for the accumulation zone, and then the market found some more support on it and then bounced away from it. This little bounce right here was pretty significant in April of 2020 because it's coming off the back of a huge, huge pandemic. And if you remember, April 2020 was only a month into the pandemic. Most people were still locked down, expecting this market to absolutely get destroyed and collapse. Yet, you can look at the tiny detail here, a close above that key support, another close above the key support, and then it breaks out to the upside. Nonetheless, the fear was still extremely high at that time. You can see just looking back, that was a key level of support before it broke down, held underneath it at this zone, then held above it, and then held above it again. Take it back to a previous cycle, looking at a key support zone for the bear market. It got rejected, it held above it, and then broke out. So that's why I'm using, at the moment, this key level here at around that $25,500. You can see that we've been rejected so far at these upper levels. We have tested this level here at 25.4, rejected, rejected. Seems like we're holding there for now. It doesn't mean we can't come back a few percent, but if you see this market start to climb back into that zone after testing that zone, that could be an even stronger area, a more safe area to be reaccumulating some BTC for the next cycle, for this next stage of the bull market cycle. So I hope you found a ton of value from that. And if you want to learn how to trade cryptocurrencies like many of our members do, smashing these percentage gains here, this is just from the recent video I did as well, 200% up here and several more hundreds of percent. Link is in the top of the video description. So register now for our free crypto trading workshops and our free crypto and economic report. Guys, thanks again. Hit that like and subscribe button. Thanks again for joining me out here in Bali, Indonesia, and I'll see you back again at the next video. Until then, take care and peace out.